Everybody, good morning, Cav. Good morning, Miss Lucy. Welcome to the education room, my friends, and it is just that, an education room. Good morning, Miss Trina. I am not here to call trades. I'm not even here to tell you how to trade, guys. My job is to teach you to read indicators so that you can make good decisions all on your own. With that in mind, let's move forward, guys. News. Nothing happened until Wednesday. Well, no high-impact financial releases. For those of you that are unaware, there are bombs dropping all over the Middle East, and that is creating a little bit of crazy in the markets. Be aware. Again, I don't give trading advice, but if the market is moving too fast, if it appears that when you get in, the market does more than the bars on your chart show, guys, there's a level of volatility. I watched crude oil last night, and it was faster than FOMC. It was completely untradeable, so I tried to trade it on Sim for the fun of it. And yes, Miss Jen, the clocks did change. Sorry, I forgot about that. You guys are smart enough not to do that nonsense, right? Or you just do it differently with a funny accent. Who knows? Guys, if your market's too quick, you don't have to trade it. If your rules aren't met, you don't have to trade. If you can't identify advantages on your chart, you don't have to trade. Never relinquish your control, my friends. Don't do it. Hey, good morning. Good to see you, Dilip. So guys, every morning, forexfactory.com/calendar. If you are in the funding company, it is forbidden when you are in a semi-live account to trade red flag news, USD market, straight from forexfactory.com/calendar. We send out reminders every morning. We send out weekly emails. Heck, we even post in the room that it's coming. And guys, it's ridiculous. I shut down probably 3 to 4 accounts a day from people doing it. One of the most ridiculous ways to lose an account. All right, we're going to talk TradingView first. Miss Diane, it's nice to see you in here. Guys, we're going to talk about reading the T3 indicators on TradingView. That'll be our first goal today. And that's exactly what we're going to do. We're going to use a checklist for entry. I've already dropped in the room. If you guys weren't looking, if I snuck it past you. Here's your new user plan, giving you something to follow until you can write your own. There's also a trade journal that's going to show you all sorts of pictures of what can be done on the software from the plan. There's even the PowerPoint that I used to teach. The same is in there for NinjaTrader, if you are a NinjaTrader user, guys. The whole idea is to be able to look at your charts and say, this is awesome. I have exactly what I need to take a trade. Or even more importantly, and man, I'm going to say it, to look at your charts and say, you know what? Not yet. I don't feel good about it yet. It hasn't done what I need it to do. 90% of your day is sitting in that state, that it's not right yet. It's not my trade yet. My rules aren't met yet. 10%, you're going to go out at full rock star, excited about being in the market because you're going to be trading a pattern. That's all it is. That's all I teach. It's a pattern. And it's a pattern that you'll be able to prove wins more than it loses. Those of you in the room that have been taking this trend trade on TradingView, when you put yourself in a position that that's all you take, you guys are reporting to me about 75% winners, give or take. I don't know about you, but that's like 32 flavors of kick-ass. It's hard, unless you just absolutely stink at management, to not have a good day at 75% winners. You're going to understand through your chart reading, through looking at your charts, the things that we talk about, where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. These concepts become ways to enter. That's where the market is likely to continue with an already defined trend. Where the market is likely to go, you're going to be able to look at your chart and say, you know what? That's where the market is most likely to go. What a great place for targets. And then you'll also understand where the market is likely to stop. And Victor was nice enough to give me a picture of that this morning. Hey, Mark, I saw this key area on my chart before the market ever get there, and I will be damned if you talk me into trying to take a trade into that area. That's called a termination condition, guys. That's one of the brilliant things you'll be able to do probably within the first couple days with me. There is a path to get to where you want to be ASAP. The most ignored, shunned path in the world, I think. It begins with learning the rules, guys. Learn the simple rules. When I say that there's 3 rules on 2 charts, I mean it. There's not a lot of variation, not a lot of gray area. If you can keep it that simple, you'll be floored at how stress-free trading can be. Everyone in the room has the ability to simulate. No need to say, oh, you know what, I'm trying to learn this. Let me lose $10,000 of my own money because I'll never be smart if I don't have a skin in the game. The smart people don't put a skin in the game until they understand what they're doing. So practice, practice, practice. Try to win. Learn how to lose. But more than anything, try to follow the rules, guys, because the rules create an edge. And then post in the room. One of the most important things you can do is post in the room for feedback. So every time you take a trade, drop it in here. Tell me what you did. Tell me why you did it. I will give you everything rattling around this big old noggin of mine to make you a better trader, to help you see things that you didn't see in the moment, to help you correct mistakes that may be holding you back, and then maybe most importantly, because I'm a warm, fuzzy, touchy-feely kind of guy, we will celebrate victories together and say, hey, you know what? Let's keep doing this. This is working. But you have to keep it simple. The more you look for, the less you seem to find. The more money you chase, the less you focus on rules, guys. And the plan that I give you, it used to be called the KISS plan, and I felt compelled to take it out of there. And I'm really not even sure why. Maybe I was just having a moment. Your KISS plan, your new user plan, it gives you the checklist for entry right there. Tells you exactly where your stops belong, gives you a couple pictures of it. And this is all we talk about, is that one trade for about 30 minutes, guys. That's where your simplicity comes in. Get really good at one thing. And then you'll begin to see more. So post in the room, keep it focused, learn the trade, guys. Learn the pattern, and the pattern is the same. We're going to define a trend. It's pretty easy. It's either up or down. We're going to recognize a fight within that trend. And if you've spent more than 18 seconds with the market, you know the market bounces up and down all day long. We're just going to call that little push up against a downtrend. We're going to call that a fight. Your rules have you pinpointing right where that fight is most likely to be lost. There is a very clear path for entry, and the hope is that it just resumes the trend. And every trend trade you take will look like a trend, a fight, and a resumption. If it's a winner, if it's a loser, it'll look like a trend, a fight, and a loss. And guys, anything that wins 75% of the time, it's going to lose 25% of the time. So consistency is key. It takes 2 charts to identify the trend trade. We use a large chart first. It's a very slow chart, guys. It's a 15-minute chart. That's huge, especially if you're coming to me and working your way over from Renko bars. Morning, OG. The 15-minute chart will define the direction, letting you know where the trend is and what it's doing. It'll define momentum. I'm going to give you a little map to use that momentum for management. It's going to show you key targets, and it's going to show you those terminations, areas that you just shouldn't trade into if you're following the plan. The 15-minute leads the way. This is like the overall opinion of the market. Your small chart defines the immediate strength, and it's going to show you where the entries are coming from. And it's only a 1-minute bar, which is still a pretty big bar. But it's like, I don't know, maybe 14 times smaller than the 15-minute chart. Ba-dum-bum. So it takes 2 to make a thing go right, guys. We're also going to use triggers. Triggers, they're moving averages, doesn't matter. They have colors, doesn't matter. You've got 1 set of triggers on your large chart. You've got 2 sets on your small chart. You've got small triggers and large triggers. Now, if you are only focused on the trend trade, If you're not worried about any of the other trades, guys, you don't even need those large triggers. If you want them off your chart, let me know. I'll show you how. So one set on the large chart, 2 triggers on the small chart, and then we're going to use areas with those triggers to define this trade. Areas, let's keep it simple. Areas are horizontal lines on a chart. These are called one-to-ones. There are magenta and yellow. Now, all the technical jargon is that these are 100% Fibonacci alternates. Institutional traders, big money, they use these for targets, for terminations. Sometimes they even enter at them. Guys, in an uptrend, these dots can be resistance. In a downtrend, they can be support, and they are bouncy. Divergence highs, loss of momentum from a high pivot. Divergence low, loss of momentum from a low pivot. Your software calculates and prints automatically. These can stop a market and create a bounce. So lines are bouncy. Outer bands, mid band, moving averages. Outer bands are point of exhaustion. They can be bouncy. Mid bands, that moving average down the middle, can be bouncy. And then guys, it's just going to look like this. And all you need to remember is that if price reaches a line, that line can create a bounce. Is everybody good with that? Does that feel like oversimplified? I hope it does. I hope you're saying to yourself, there is no way that all I need to know about these indicators is that these lines might create a bounce, but they do. And let's learn how to use them. Here comes the trend trade. Here we go. It's Monday. Wake up, everybody. Let's define a trend, right? Because I can't take a trend trade if I can't define a trend. This is your large chart, your big chart, your slow chart, guys. And those triggers that I talked about, they're going to define the trend. So they're either up or down. Pretty simple, right? 3 things you can do in the market. You can buy, you can sell, or you can wait. If you can't tell what direction the triggers are going, if it feels like they might be up but they could be going down, guys, you can't define the trend. How on earth are you going to take a trend trade? So let it be very decisive. Let them either be up or down. And then once you define the trend, your first rule is designed to give you room to targets. In the 15-minute, the big slow chart is not trading directly into areas. So here comes your large chart read. My triggers are up, therefore my trend is up. I always do that first to make sure I'm trading the right direction. And there is nothing in the way. And you're like, oh, Mark, nothing in the way. It's got to be more complicated. It's not. If there's nothing in the way, you have room to targets. And if there is something in the way, you do not. Nothing in the way, let's go look for an entry. Something in the way, let's sit on our hands until there's nothing in the way. Is everybody good with that? I hope so, because I'm moving on. Rule number 2 says the same darn thing. Don't trade into stuff, guys. Stuff creates bounces. But rule number 2 works hand in hand with rule number 3, because we're going to have to define our entry. And then once we define our entry, we're going to make sure that there's nothing in the way. So let's define entry, and then we'll backtrack to rule number 2. Maybe we should call that rule like 2 and 2.5. For a long trade, when the large chart is trending up, let's do some drawing this morning. So my trend is up, the push is up, the people in charge want it to go up, and it's the small triggers rolling on the small chart. This is your immediate momentum. When these triggers roll down and the large chart triggers are up, the fight is on. And the fight is not the entry. Once these triggers roll down, I'm going to turn my attention to lower areas, whether they are one-to-ones or mid-bands, zones if you have chart prime. And I don't just enter at the area. Your entry will be an up bar that finishes. And when I say finishes, I mean the timer is done on your 1-minute chart, and both corners where that bar closes are above the small triggers. That's getting out of the way of the immediate strength. That's where the small chart typically gets back in line with the large chart expectations. So there's a little bit of the way. No, nothing in the way, Limpid. Good question. Areas. So write it down on a piece of paper. Areas are bouncy. Areas can cause bounces in the market. So when we talk about room to trouble, we're literally saying the market can't be at a horizontal line. It can't be at a zone. It can't be at one-to-ones. It can't be at a divergence high. Because all of these things can create a bounce. So when you define your entry, there should be nothing in the way. Trigger lines, not bouncy. It's areas that we don't want in the way. So for a short trade, when the trend is down, the fight begins. Did that make sense, Limpid? Price can never be in the way because we are literally entering with price. That's a good question. I've never thought of it like that. Triggers define momentum. It's the areas that create bounces. That was a great question. Thank you for that. Guys, when the trend is down, the small triggers roll up. There's your fight. That's the start of the fight, the beginning of the fight. You're just going to look up. Where are my areas? Because entries come from areas. Why? Because areas are bouncy. When it gets to the area, we don't just jump in. Because these small triggers are like the in the now, giddy up, fighting that large chart. So your entry is a down bar that finishes below the small triggers. And this is where the small chart is most likely to change direction, to reverse, to go in the direction of the large chart trend. So when we go back to that room to targets, the trend is down, the fight is on, the entry is very clearly defined. If you remember that phrase, pull back to an area, close below the triggers, and from wherever that bar closes, there has got to be room to something that could create a bounce. We're in this to get paid, right? Seems silly to trade directly into a wall. The market pulls back to a mid-band. Close above the small triggers is the entry. I need room to the first thing that can create a bounce. That's it. Price pulls back to an area. So guys, one of the things that I do, I'm a huge fan of language. Let's pull some language, not questionable language. So when I talk about an entry, some stuff has to happen. Because the SIML triggers roll up in a downtrend or down in an uptrend. That's the first thing. The fight is on. Is everybody good with that? Give me a why. If you're with TradingView and you're brand new, when I ask you if you're cool with something, man, answer me. Because if you're not, I promise I'll get you clarity. All right. So my rules say, look to an area higher for a short trade, lower for a long trade. Reach an area, close on correct side of triggers. Limpid, did you walk in just a couple minutes late? That's okay. Let's get you right here. Let me back it up for you. Let me back it up. Let me just shut it down and then we'll restart it. No, you're cool, man. This is what the classroom's for. Please don't ever be sorry. And remember that you do have, this PowerPoint was dropped in the room for you guys. So you can always go back and reference it. But that's a good question, right? Why do we use two charts? How do they work with one another? Well, your 15-minute chart is this crazy slow chart. 15 minutes is so long. Takes forever to print one bar. You could have like 100 points inside of one bar. So we use the 15-minute chart to let us know what the market is doing on a grander scale, defining direction and key targets and terminations. Your small chart is just an entry chart. It's 1/15 the size, and it shows that little fight that takes us to the perfect entry. Now let me give you my favorite metaphor to kind of give you a visual. The large chart is the large crowd. These are the men and women with the money, with the influence, with the power, with the charisma, and they create trends and they react at areas, and we just let them be in charge. Some people will say the market is rigged. This methodology is designed to keep you focused on the people that are rigging it, and the large crowd typically wins. Now, the small chart is like a small crowd. And these are ne'er-do-wellers, and they create these little fights that lose against that large chart trend like 75% of the time when you're following rules. So we use that smaller snapshot, and that's what gets us to those perfect entries. And by using the smaller snapshot, it allows us to reduce risk. It allows us to have like the furthest room to the next area that could be problematic, because when you wait for the fight, you're further away from that thing that can create a bounce. Does that make sense, Lipid? So large chart always leads the way, which is why if rule number one's not met, I don't bother looking for an entry. You don't need them. You don't need them for the trend trade, not at all. The large triggers are a momentum measurement, and you will use those for the trades that I don't even talk about in here. You'll need them for the momentum trade. You'll also need them for the HVA trade. But Limpid, I am so hell-bent on simplicity for you guys as you learn this methodology. I don't talk about either of those trades. So in order to accurately catch a trend trade, you need small triggers on your large chart. Woo, they launched it, didn't they? Look at that. Holy wow. Where are we? 620. Trying to get to the most current. You can tell I haven't looked at this one today. There we go. We use the large chart, small triggers to define the trend. We use large chart areas to make sure that we have room. And guys, from here, I do have room to a mid-band. And then over on the small chart, I could lose those large triggers. I don't need them. When the market pulls back to an area, when it closes below the small triggers, that's what initiates the trade. So the large triggers are for totally different trades. You're welcome. I appreciate that you'll ask questions. Please don't stop doing that. This classroom is 1,000 times better than I could ever make it when you guys tell me what we're going to talk about. True story. So when we talk about the trend trade, let's do the two chart view now, right? We broke them down individually. Let's see what a trend trade looks like. So first it's triggers up, and that defines the trend. And that's pretty easy for most of us. Is everybody good with that? These triggers are down, my trend is down. That's the first read. And then the second question is, does the 15-minute have room to trouble? And guys, your 15-minute is literally inside of trouble as this market's about to open, which means that there is no way I could ever say that rule number one is met. But if it is met, you'll have some distance between you and things that can create a bounce. And then once that rule is true, once the first rule is in play, that's when we go to the smaller chart. And it's going to look like this. It's going to be running without you. And if you've ever experienced the fear of missing out, right about now you are sucking a pleat into your leather chair that's going to be hard to remove, right? And we're waiting for the small triggers to roll so that we can get a pullback to an area. And before that ever happens, you see the areas below. The hardest thing that you'll ever do, and I'm talking to all you people, the hardest thing you'll ever do is nothing between the rolling of the triggers and the entry at the area. Because the small triggers roll down in this uptrend with room to targets, I know exactly where my trade comes from. I don't have to hope or wish or want or pray. I just have to sit on my hands and wait for it to get there. And if it gets there, I have to wait for the close on the correct side of the triggers. And if it doesn't happen, it's just not my money. My money comes from a trade that I can prove wins more than it loses. My money comes from having an edge, an advantage. So I don't care about anything when I trade other than the process, because the process yields results. This was from the live room. We did this together. When the triggers were down and there was room to that green zone, we drew a box. We said, hey, we need the small triggers to roll, and we need a pullback to one of these areas. We don't know which one it's going to be. And it was 9 minutes that we sat together as a classroom and watched the market retrace. And it was 9 minutes until the entry rules were met. And then it was 2 minutes until we made 30 points a contract on a 5 lot, taking that trade down to the large chart support. You will know exactly where your trade's coming from if you just learn that phrase. The small triggers rolled up, I need higher resistance and a close below. Is everybody good with that? That's it. I wish there was more. Miss Diana, you were wondering about the indicators. This is it. It's triggers and lines, triggers and areas, momentum and areas. That's it. So an uptrend, let's talk about stops real quick. Does everybody here give me a Y in the room, or a thumbs up, or a beer clink or something if you realize that you're not in control of the market? If you realize that the market's going to do what the market does and it doesn't care about you, nor does it even know that you exist. That was one of the hardest truths. I can't control it. So when I'm in an uptrend, the buyers are in control. The large crowd is doing their thing. Yeah, OG, it happened last Thursday, I think. There was a memo. They sent out a memo. Guys, when the buyers are in control, your small chart is probably going up with it. And it's the sellers fighting that gets us to our great entry. So the buyers say, yes, we want it to go up. The small chart says that we're going up with them. And then somewhere, there's like a 1978 Monte Carlo full of hoodlums, and they fight, and they push down to these areas. And you will see exactly where they fail. The low tick in that push down is right where the sellers fail. And then hopefully the buyers pick back up and we go with the large chart. If you think of it like this, buyers are in control, sellers fight, buyers resume. It helps with stop placement, because we're going to use the failure of the small chart to define stops. So in this particular case, it was a downtrend and the sellers were in control. And it was the buyers fighting. Hey, let's make it go up. We want it to go up. That'll be awesome, right? And that right there, high tick, is where the sellers looked at him and said, dude, we got the large chart. Back off. We're going down. You guys will put a stop, point or two above that failure of the buyers. Because if the buyers try again, if the buyers regroup and come back, I don't have any idea how high they're going to push. This stop is where the market should not go. This stop is probably going to get hit about 25% of the time. It's a cost of doing business, guys. You are going to lose the most fantastic trades you've ever taken. You're also going to win some pretty crappy trades. So the key is, what gives me the long-term results? What wins more than it loses? What can I say without question creates an edge? The buyers are in control and the sellers fight, and they go right to an area and they give a close above, and your stop goes below their pivot, guys, where the sellers fail. And if the sellers regroup and try again, you don't want to have a stop way off in the distance. Take that small little hickey, get back on your horse and ride again. Everybody good with that? There's this idea that management is handled before profits ever are. And it's a sign you're becoming a mature trader. So the methodology that we're teaching here, guys, the methodology, the rules that we're giving, you're already managing your risk by trading with the trend, and you're already managing your risk by not trading into areas, and you're managing your risk by waiting for the fight, giving yourself a definitive place to put your stop. Your management starts long before you ever take an entry. And then the management of the trade begins. But if you do everything leading up to it, you've already put yourself in a position to win more than you lose, typically. And guys, that's the methodology. The methodology depends on your ability to recognize the difference between resistance and support. There's a lot of new traders that come to me, guys, and you'd be surprised. Resistance and support aren't just, oh, I know what that means. I didn't know what it meant. If the market is moving up and you hit an area, that area is resistance. Short trades, selling the market for a trend trade, comes from an area of resistance. If the market is moving down, areas hit are support. Long trades, buying the market, come from areas of support. Guys, it's imperative that you know that, because the market's going to do its best to fake you out. Market comes up and hits resistance. Short trades can happen here. But when a full body of a bar, all four corners finish, move to the next bar. When that happens above resistance, resistance becomes support. Support is not a place for short trades. When a full body of a bar gets below support, support becomes resistance. You can't take a long trade from resistance. Does that make sense? Well, I mean, you can, but you're more likely to lose it than win. You can do whatever you want. So there's this look that has been faking you guys out since we started with TradingView. The market comes down and it hits support. That's cool. Bounces up to resistance. Right on, easy to tell. And then it comes back to support. And in the moment, you're looking at the market and you're like, oh my gosh, price is railing below support. I know it's going to break. And then it doesn't. And taking an entry down here, hoping that area of support breaks so that you can have a clear path, guys, this is a big, big, big provider of losers. The second one is when you're hoping support holds, but there's stuff in the way and your rules say, hey, don't take a trade into stuff. And you get what we call the prairie dog. Well, it closed above. Guys, it is still 100% resistance until a bar breaks above it completely. And this prairie dog entry produces a tremendous amount of losers for you guys. So it's important that you know when support is support and resistance is resistance. And make sure if you're taking a trend trade, it's coming from the appropriate level. And guys, that's my whole trip. Welcome to TradingView. Small triggers say down. My rules say short. This is how you can annotate your charts if you want to learn this methodology faster than the kid next door. Room to targets. What does it mean to me? It means that I have money. Take the time not only to type out the direction, but what it means to you. Room to targets, but what it means to you. Since the small triggers rolled up, I need a pullback to an area, then a down bar that closes below the small triggers with room to trouble. And there it is. And now I know that I followed my plan. And my entry will show on the next bar because I have to wait for this bar to close. Profits taken at trouble, get to break even. Guys, if you annotate your charts like this every time you present in my room, you will get the best feedback. If you annotate your charts like that every time you present in my room, I won't be the trade police. I'll just make sure that you're reading your charts right, that you're actually following the rules, that you understand the concepts. I will look not only for the good, but will also analyze your charts and check on the bad. Trend trade short, down, weak side of the triggers, clear to the one-to-ones. Price pulls back to the area, closes below, directly into one-to-ones, right, Paul? But you pull one off this time. The market gives it to you. And it goes right down. And guys, that's a trend trade entry. Actually, from 70 to 56 or to 60, he had 10 points. He had $200 worth of profit potential before he hit something solid. Paul, I would high five you and say, hell yeah, all day. Because when it got there, you probably went break even. And when it didn't budge, you made a metric crap ton more money. Great trade. Guys, there it is. Down, room to trouble, wait for the pullback. Look at that one. Paul said, that's not my trade. These one-to-ones are still support. There's no room to that. Let's see if they want to bounce. And they did. And they gave him the perfect entry. And guys, every time you post in my room, that's what we'll do. We'll talk about it. Paul, that is beautiful annotation. $1,600 is a hell of a trade. Any questions about TradingView, my friends? Nope. Good. Feeling all right? Everybody's got their dancing shoes on? Cool. Let's go to NinjaTrader real quick, guys. I'm going to blow through this one. I've been doing NinjaTrader for 20 years. Well, I haven't, but Nexgen has. If you need a slowed down version of the rules, guys, I posted it earlier. I'm going to post it again. The first hour of every stinking classroom for the last, I don't know, 3 to 4 months. We'll cover both platforms in depth. I want to get to the live market. That's where you guys seem to have the most fun. Whew. Triggers down. Uh-oh, hold on. Triggers down. Room to trouble. Pull back to an area. I wonder if we got a close below. Would that fit rules? Oh, we didn't get a close below. It does not fit rules yet. Not yet. All right, let's go to NinjaTrader. NinjaTrader looks like this. Tends to move a little faster. Uses dynamic Renko bars. Not better, not worse, just different. So guys, if you are on NinjaTrader, please don't try to trade it like TradingView. And if you're on TradingView, please don't try to trade it like NinjaTrader. It just doesn't work out. It never has for anybody. Some of you are brilliant and can actually look at both, which I think is outstanding. My brother does it. I don't know how he does it. I just form a lot of opinions when I look at two platforms at once. Hats off to you guys that can pull it off. Guys, we're going to learn to read these charts as well. And it's the same thing. I'm going to use 3 rules and 2 charts. That's it. We're going to define a trend. We're going to wait for a fight. And we're going to hope that it resumes the trend. And guys, the high probability trend trade that I'm about to teach typically wins 70 to 80% of the time. I know that because I've done the research on that one. My trend trades on TradingView, my personal experience is about 78%. I think that's where I lie. But I don't trade 100% per that plan. We're going to learn the rules. You guys can practice. Post them in the room. Learn your pattern, guys. It's only 3 rules. So when a rule is true, an advantage is present. Rule 1 gives the advantage of momentum. Rule 2 gives the advantage of a clear path. Rule 3 defines your entry. That should sound pretty solid. Momentum and path are your core. If you don't do anything else this week other than learn momentum and path, you're working with this before you ever enter the market. I don't care what kind of trades you take. If there's momentum and path, guys, you've got 10,000 horsepower and nothing in the way. Your entry area is a way to capitalize on it using a smaller, faster chart. The perfect trade is momentum plus clear path plus entry. These 3 rules take 2 charts. Good morning, Miss Donna. I see you typing every day and then you stop typing. One day you're going to say hello. Your large chart, once again, the big crowd, the people in charge, they're going to define direction, momentum, and areas. Your small chart will define the fight, show you where it's most likely to be lost, give you the perfect entry. All of this happens inside of that one bar. So when rules 1 and 2 are met over here, when you have momentum, when you have that path, you don't really see a change on this chart. This chart shows the fight continuation. Areas are bouncy. Both charts have areas. Triggers define momentum. Both charts have triggers. Small triggers and large triggers. Now, limpid, we use both on these platforms for this high probability trend trade. But if you're on TradingView, go get a cup of coffee and toast a bagel so it doesn't confuse you. Guys, small triggers will define momentum for rule number 1, termination conditions for rule number 2. The large triggers will define your beautiful entries for rule number 3. So we're going to break down these 3 rules using triggers and areas. And rule number 1 says that the big chart, the slow chart, the broad stroke of a brush chart, the big crowd who wins more than they lose must have strong triggers. Strong triggers either is or is not. So trend is defined by background color. It's either up or down. Once again, guys, if the background is green, it's up. If it's red, it's down. I can't have strong triggers. You can't have strong triggers if the colors of your trigger lines do not match the background, or if the colors of the trigger lines do not match one another. So everything must be green or everything must be red. And if it's not, you simply don't have rule number 1 met. But in an uptrend, when the colors match, your strong triggers mean that the small triggers have broken above the large triggers. The large triggers are wide, angled in the direction of the trend. It looks very much like scissors that are open, ready to get the work done. In a downtrend, your small triggers break below the large triggers. Large triggers are wide, space between. Once again, the scissors are open, you can cut. Separation is strength. The odds are favorable for the market to continue up. The odds are favorable for the market to continue down. You guys are going to see charts annotated in here all day long. Odds favorable momentum. This is a look that pushes a market. This is a look that can break key areas. This is a look that can even cover the mistakes that we all tend to make as brand new users. And now, if separation is strength, absolutely no separation is weakness. If your scissors are closed, you can't do anything better than take a stab at it. Without separation, there is no strength. The phrase that I want you to latch onto is that anything can happen up or down. Odds are favorable for the trend to continue. Anything can happen up or down. Have the potential to break key areas. Anything can happen up or down. Guys, there's got to be one where you're like, yes, this feels good, and one where you're like, I'm going to do anything other than hope the market goes my way. And that's it. That's the whole lesson for rule number 1. You'll see it on a large chart. First bar. Background is green, triggers are red. Rule not met. It's that simple. Rule number 2 says don't trade into a termination condition, an area that could stop the market. Areas are bouncy. And because areas are bouncy, we're going to learn to respect them. Good morning, John Novak, CEO. Guys, areas are where the large crowd make decisions, where the buyers buy and the sellers sell. So in order to define an area, a horizontal line on your big chart, as a termination condition, we're going to let the large crowd get there. And we call that price reaches an area. When your dynamic Renko bars go up and smack into an area of resistance, we're done with price. We no longer need it. And when price comes down and hits support, we're done with price. It is no longer relevant to the equation. We're going to let the trigger lines tell us everything we need to know about this area. So if price reaches resistance and none of my trigger lines, 0, make it above that area of resistance, that area of resistance is what we call a termination condition. And a termination condition can stop a market. A termination condition can reverse a market. A termination condition can set off a fight between buyers and sellers, or a termination condition can break. You guys remember earlier when we all had to admit that the market doesn't know we exist and we're not in charge? Guess what? This kind of is a little piece of that. You'll never know. You'll never know what the market's going to do. Not 100% definitive. But the cool thing is we've done so much research for you that if you learn to count triggers, you'll know what it's most likely to do. So if price reaches Fibonacci resistance and no triggers break, it's more likely to stop that market than it is to just break. And if price reaches support and none of the triggers break through, it's more likely to stop forward progress than it is to go. And John says he knows 100% what the market's going to do. But 30% of the time, the market is wrong. That reminds me, have you guys seen the new, it's a Walmart commercial. He goes, I didn't forget. I just remembered later. That's my new favorite phrase. So guys, when price reaches an area, no triggers through, no trade. Can you guys remember that? Zero triggers, zero trades. It really is that simple. Rule number 2 is not met. The market is more likely to disrupt your good time than it is to just arbitrarily break. 36 times. 36 times when rule number 2 wasn't met that the market created a loser. I took this picture before Thanksgiving. 10 times, or I think it was 7 times. 1, 2, 3, 4, 5, 6 times. It actually broke the area where you had a clear path and life was good. And guys, it's not about the one time that it magically breaks. It's about the 9 times that it doesn't. And we're looking for the edge. So no triggers, no trade. If it's really going to break, the small triggers will smash through and they will get above the line in question. And you have to have momentum because you're all working with rule number 1. But with 2 triggers through, even though the potential is there, you experienced users, it's not your best look. So in the new user trading plan, it says pump the brakes, sit on your hands, relax for a second. If it's going to break, it's going to break. You will have a better shot when 3 of the 4 trigger lines get through the area. And now that number 3 is yellow because this is what we call a 50-50 trade. And there is a very solid checklist in the plan that I give you to take advantage of that potential to break. But it's not high probability. Rule number 2 is still not met. It's only potential, which means that you'll have to manage it just a little bit more assertively, maybe take quicker profits, perhaps get to break even a little sooner. This will be the majority of your trend trades. I'm going to tell you right now. But if you don't know the difference between a termination condition and all 4 triggers through an area, providing a clear path, you may struggle with the second trade. 4 triggers through, the path is clear. You can get a clear path from a breakout when all 4 triggers break, so what we call a breakout of Fibonacci, or from a reversal. The market hit resistance, everything turns, and now suddenly there's nothing in the way. And the momentum is strong. And there's room to targets. And you, using a smaller, faster chart, are going to remember a phrase. Buy or sell a pullback at an area inside of triggers, and you will pinpoint right where these tails are most likely to form. And guys, those tails on a large chart, you don't know if or where they're going to form. You're going to use a small chart to pinpoint right where your trade is most likely to come from. And I'm looking for momentum and path. I can circle a tail and go to a small chart, and it's going to look like a pattern. And we'll come back and visit it after we talk about the rules. This is going to be a study tool for you guys. The market pulls right back to areas inside of triggers. That's where the magic of rule number 3 happens, where you will define the point where the fight is most likely to be lost. You will know where it's at before the market ever gets there, and you're actually going to be so confident in your methodology that you'll wait at that point with a limit order. And you'll say, come get me, small crowd, because you're going to use that limit order to buy or sell a pullback. That's the fight. That's the push against the large chart. It's going to begin with a reversal bar. You're going to wait for it at an area. Fibs, mid-bands, yellow 1-to-1s, because areas are bouncy. It's like throwing a tennis ball against a brick wall. But those areas need to be inside of triggers, guys, and this is where the magic happens. Those large triggers on your small chart are going to show you where the market is most likely to pull back. It's going to show you exactly where your areas need to be. and it's going to set you up to trade an entry pattern. And that's all it is. The same way on TradingView, your entries are going to look the same every time you take a trend trade. It's no different on NinjaTrader. First there's a trend, then there's a fight, and then there's resumption. So let's go through defining. Your reversal bar begins the pullback, the fight. It's not your entry. Your large triggers, there's actually two sets on a small chart, one from the big chart, one from the little chart, working together to increase accuracy. This is where the market is most likely to retrace, to pull back, to fight, somewhere from the top line to the bottom line. I don't know where it's going to be, but that's where it's most likely to happen. The market is most likely to bounce and continue in the direction of your large chart advantages from an area inside of those triggers. But because the large chart, you guys, where's my picture? Hold on. Because the large chart is doing this number, momentum and path, you're going to activate a limit order just above the highest point of support inside of triggers. This is where your entry for the high probability trend trade comes from. In a downtrend, reversal bar begins the fight. It's not your entry. Trigger lines define where the fight's likely to be taken, not your entry. Areas inside of triggers, and guys, this is a magical moment where there's just one line inside of triggers defining right where your trade originates, right where your advantage is. And guys, this becomes your entry for the highest probability trend trade ever. That's the best of the best. This pullback is a tail on the large chart. You can't define where that tail is going to be just using a large chart. So we use the areas inside of triggers. And if you go back and circle those tails on a large chart, if you say to yourself, I want to be good at this, I want to recognize this pattern, I want to know when it's met, I want to have the best chance of success as a brand new user. That one was into a termination condition, but you'll notice that the patterns repeat over and over and over. There's that 2 triggers. Come on down. Where was it? I think it was that one may have had 2 triggers through. Right to the area, right at the top, push down a little bit, right at the areas inside of triggers. And it just happens over and over, all day long. Until eventually, you're so comfortable with the pattern, you can't stand the thought of missing that trade. So when you present in my room, talk about momentum, talk about path, define your entry. Guys, use that phrase every time you take a trade, and what happens is you're comfortable, you're confident, it's repeatable, it's testable, and it creates what we call an edge. And an edge just means that you know with no uncertainty that the pattern you're trading wins more than it loses. That the pattern you're trading, that the advantages you're leaning on, that the exact same thing you do every time produces more winners than losers. So you focus on the execution of the method rather than, oh, I made 100, I made 200, I lost 300. Guys, it's doing the same thing every time. And when you learn to speak in terms of momentum, path, and entry, you know when one of those advantages has gone away, and that's what puts you in that medium probability trade, where most of your indicators line up for the trade. However, an issue exists. This will be the majority of your trades. But you'll say to yourself before you ever enter, I may have to manage this one just a little more aggressively, a little more assertively. And some of you might say, well, I can't find more than one advantage. That's low probability. I'm just going to choose not to take it. Because the markets trade billions. And I only have to find 400 to 500 a day to be a 6-figure trader. And guys, it's not about being in every move. It's not about being the first one in. It's about defining a pattern that can be proven to win more than it loses, a pattern that creates an edge. And you Mark Douglas fans probably recognize that speak. John Novak and Mark Douglas worked together a lot in the 90s, and a lot of our education comes from that. The idea that you don't have to know what the market's going to do next to make money in the markets. So that's my first hour. Are there any questions? You guys want to see something cool? John Novak automated everything that I just talked about on NinjaTrader into areas. You're absolutely right. We'll use second lower divergence, our condition, exit condition as an entry to break through areas, get in on the way down, stop above pivot. That's experience. Good stuff, John. I like that. So one of the things that we're going to look at after we look at y'all's charts is we're going to come in and look at the automated system that uses momentum, that insists on path, that defines an entry on a smaller, faster chart, and even works the management in for you. I'm excited about that. We're going to do a lot of time on this, guys. He's worked really hard to automate the perfect trade. All right, here we go. I'm going to click on all of the charts that are posted. And guys, remember, I'm not the trade police. I don't want to be the trade police. My job is to make sure that you're reading indicators correctly. My job is to make sure that there's not a misunderstanding of the actual rules, of what they mean, of what it looks like to have them happen. I love this. Sergio dropped like 15 pictures in. Guys, if you're not doing this and you have questions, why are you holding yourself back? Sergio knows, hey, as long as I annotate it, Mark will give me feedback on it. I'm working on this different looking trade. Let me get as much feedback as I can. I love it. And we got Paul. And we got Paul. We got Paul. We got John Novak. And Miss Lucy. My system is off on the small chart. Thank you, John. It's going to struggle to take an entry without it being on, right? Oh, it's disable after any trade. We're going to fix that. And guys, one of the things about this, it's not set it and forget it. Intelligent traders monitor their trades, guys. The same way you would never unlock the front door of your business and then go out and play golf, right? The same is true on this. It'll give the signals. If the rules are met, it'll put you in, but there's ways to have less risk. There's ways to have better targets by monitoring, and that's one of the things we're going to do in this room, is this becomes brilliant management lessons for you guys as well in the room. Where was I? All right, so we clicked on every picture. I'm going to go take 2 minutes. When I come back, we're going to start running through everything that's been posted. Some of them will go quick, some of them will go slow. If there's a lesson on your chart that maybe you didn't need, bear with me. Somebody else may need that lesson. Somebody else might want it. I've also got a look-alike chart, 15-minute, 1 minute, for you old school, don't want to leave ninja people. Oh, look at that. You can even see that the... because it's on simulator 2, you can see that the system was putting in a trade on any chart that has simulator on it. So what I'm going to do is I'm going to go to this and I'm going to shut it down because I do believe it should be monitored. And I'll be back in about 2 minutes, guys. You guys can watch it. It'll still throw arrows. I'll see you in about 3 minutes. And the market is screaming. Here we go. Cav got us going. Trading crude oil when it's in that absolute frenzy. Market is moving up. Clear path. Pull back to the area inside of triggers. Easy peasy. Cav, perfect read, perfect trend trade, easy money, all the way up to Fibonacci resistance. From 90 to 50 is $600 worth of movement that originated from the perfect trend trade. Nicely done. Same look, other direction. All the momentum. Thank you, John. Pull back to the area inside of triggers. Room to trouble. Once again, easy peasy. One more. Market's coming down. Room to trouble. All the momentum. You're going to hear me say that a million times, guys. Momentum and path. And I love this. They come back and they didn't get them. And Cav's like, man, I'm not jumping in. I know better. I trust my methodology. And they came back for him. Cav even said, Mark, you've pointed this out numerous times. Just wait for the next one. If it's your money, they'll come get you. And just absolutely beautiful, Cav. Great chart reads, great looking trades. Good stuff. Victor says, everything's going down. I'm going to jump the fudge in. Not going to trend trade. Going to break my plan. I'm going to get emotional. And guys, the flip side of emotional entries is emotional exits, because you know when you've broken your rules. You know when you've gotten outside of the thing that you feel comfortable with, and you're going to start tightening stops, and you're going to change targets. And that's exactly what happened here. Jump the fudge in. Didn't know how to manage it, and just took the loser, took $300 loser that now you've got to make up for with the beautiful trades. And that's exactly what Victor did. He said, all right, I did my thing. I made my mistake. I'm done. Now my triggers are up. I got nothing but room. Look at that pullback. Pow, pow, pow. Close above. He gets just a little late in, making money. Makes it all back plus 100 with the perfect trend trade. And guys, this is pretty common. Whoops, that's really big. I take the perfect trend trade and I make 300. I break my rules, lose 300, I'm back to zero. I take the perfect trend trade, I'm up 300. I break my rules, I lose 250, and now I'm down 50. And guys, if you get to the point where you eliminate those avoidable losses, where you eliminate that deviation from your plan that's been proven to win more than it loses, you don't have to force your great trades, your $400 beautiful trend trades right to trouble to make up for the 300 that you lost breaking rules. And that's a pretty solid lesson. I don't care what you're trading. Trading the patterns, momentum, room to trouble, pull back to the area inside of triggers, and out at trouble. And GWC, rockstar. It's the perfect trend trade. Triggers are up. Room to trouble. Pulls back to the area, closes above, out at trouble. Another 285. Beautiful trade, Victor. Woo! Got some crazy triggers going over here. Termination condition, market rolls up, odds favorable momentum, room to trouble, pull back to the area inside of triggers, and out. And then GWC, if you right click and hit F5, it'll reload your ninja script and fix that trigger trouble. Market's coming from a good top. All the triggers are down. Below, cranking, and Pete, is this you? Or is this is Cav? Takes the perfect momentum trade, out at trouble. Just beautiful. Great job, Cav. Taking advantage of that volatility. Wayne, you agree? You took one prime trade this morning for 600. Easy done for the day. Target for 150,000 this year. I love that. I love that. Don't have to be in all the moves, do you? Does everyone remember when they started trading and you'd see the market go up and down and you just felt compelled to have to be in every tick? And then you start relaxing and you're like, whoa, there's so much money to be made. Let me make the best money. Wayne, you are the epitome of that good stuff. That's everybody's hardest lesson. That there's so much money to be made that it's your right to wait for the easy ones. Without a doubt. All right, Sergio, are you in here? Triggers down, room to trouble, broke the rule trading into areas, and got stopped out, right? Good read. Entry full bar printed under the fib. Didn't notice the mid band. Didn't notice the one-to-ones either, right? One-to-ones, mid band. A lot of trouble there, Sergio. You traded directly into it, and it did everything we would expect support to do. Guys, these are okay. He's doing playback. He's learning lessons. So Sergio's going to have a note somewhere that says don't trade into areas. They're bouncy. Triggers are up. Pulls back to the area. Jumping in above, right? Couldn't get your entry rules met, Sergio. So you just jumped in directly into an outer band. No momentum to push it. And you got one there. Your entry's at 45. Did you put your stop $300 below it? Jumping in directly into trouble? 10 times speed. Sometimes it's hard to keep up. No room to target. So this trade is no different than the previous one. But this one happened to win. Pull back to the mid band, close below. Perfect. There's your trade. Large chart mid band looks like it stopped it. Perfect. Did you see the mid band on the large chart, Sergio? Absolutely killed that trade, didn't it? No reason to give it all back. Large chart areas are great targets. Imagine getting all of them at 55, right? That extra 80 bucks, how much that would add up. Watch this. That $80 over the course of a trading year, $20,000, Sergio. Just learning to respect large chart trouble. Learning to respect areas that can create bounces. Guys, I'm telling you, there's a way to do it. Victor, you had 2 perfect trend trades. You knew it. They were perfect, ideal. The other one, we've already talked just all about it on your Jump the Fudge in trade. But the lesson, Victor, that we talked about is that if you don't find yourself taking those avoidable losses, if you can eliminate those from the plan, you don't have to let your perfect trades get you back to break even. That was the lesson on it. Triggers up. You did have room to trouble. So, Sergio, one of the things that I notice on this, do you see how it already made it? Like they've already gotten to where they're going. And look at the reaction. Huge push. Your entry makes sense, 100%. But because they've already been where they want to be, you got to manage these tight. Got to manage these tight. And if you're doing replay too fast, this is an important lesson for all you guys and gals, dudes and dudettes. If you're trying to get good at something, the market doesn't trade at 10 times speed, right? If you can't make good decisions, if you can't move stops, if you can't adjust targets, you're not training yourself to be successful in a live market. Does that make sense, Sergio? Now, what you can do is this right here. I'll go 20 times until my large chart rules are met. Then I'll go maybe 2 times to take and manage my trades. You can still fast forward, but when it's time to trade, hit that pause button, stop it, get it back to where it needs to be. Put yourself in a position to get work done. But the real lesson on this one, Sergio, do you see that it already got there? Like they had already been to the trouble spot. You're trading 30 minutes before close, which is a tough time to do it. And these triggers are pretty flat, wouldn't you agree? Not a lot of push. Not a lot of push. Here they're down. Room to trouble. Pulls back to the area. Closes below. And it's directly into the outer bands again, Sergio. And look at that. Outer band. Just can't break it. I'm so glad you made money on this one. But the outer band is one of those areas that can create a bounce. The outer band is an area that can stop forward progress. So when you're taking into account room to targets, divergence highs and lows, fibs, one-to-ones, outer bands, they all make the list because they can all stop a market. Triggers down, pull back to the area, close below, and then that's the easy one, right? So, Limpid, good question. Let's see what they look like right now and see if we've got a real live example. Nope. So, when the triggers look like this, and let's make it look like that, there's two things that can happen, right? Oops. I could take the wrong picture, or I could take the right picture. But beyond that, when the large chart triggers look like this, if the market goes up from here, they never even look like they went down or threatened. And if they go down from here, well, then you feel brilliant for taking the short trade. So when you can't define it, I'm not sure what's going to happen next. Even right here, I don't know. Are they going to continue down or are they going to go up? One of the things you can do is you can force them to not only come together, but let the next bar print so that they're official, so that they are officially down. Does that make sense? Because until they are officially down, you're trading the I hope they go down, and now the bar is printed, and now they're officially down. And this goes back to the idea, Limpid, that you can sit on your hands and do nothing. Here's a good example. These are down, right? And they looked like they were going up, and then when this bar opened lower, now they're pointing down again. So if you're not sure, force the big chart to tell you for sure. Does that make sense? Like demand that the big chart give you clarity. You're relying on it to define a trend for a trend trade. And if you can't tell, it's always better to err on the side of what it's been doing. It's been going down the whole time. Is it because of some of the examples? I'm not sure what that means. Yes, it makes sense because I'm giving examples. I hope so. But I see people try to go long right here. And it's just better to stick with the trend for sure. Let it be exact. Oh, not the trades? Right on. I think you can learn how to trade without ever taking a trade. I firmly believe that. Everything is a pattern. Down, not too much room. Close below. Never made an area though, right? Sergio never made an area. This was your close below. That was your trade. And that one never ended. That one took you all the way to the promised land. This one never made the mid band. You did get the close below. It's a late entry. And then once again, Sergio, are you in here? I need feedback from you. Do you see that mid band stopping stuff? That's like 5 times now. So maybe you jot a note somewhere. Mid-band can create a bounce. Mid-band's a pretty good target, right? And this is, you're trading at 830, and that's just a little psychosis, getting to their target and starting back up. That can happen in the markets. Triggers are up, room to trouble, pulls back to the area, closes above. Easy money. Easy money. Keep moving, stop. Keep getting stop hit, right? Keep moving, stop. Keep getting stop hit. Are you going break even, or are you just picking a number that feels good? Either one is fine, whatever your plan says. But it doesn't seem to be working for you, right? You're right inside of those triggers. You're right at those triggers. As much money as you're giving back between, that's like 25 points. If you feel like you're just going to throw a stop in the middle of nowhere, why not just take the money? Wait for the next trade. I don't want to give back. Personally, I don't want to give back $500 on a trade that I'm up thousands. I just don't want to do it. I don't get any of that money, and I pay commissions on it. Triggers down, pulls back, closes below. Get paid. Nicely done. Good job, Sergio. You know what you're looking for now. I think now management will help. Trades into outer bands tend to bounce. And I feel like that's what we got out of those pictures. Great job, dude. Great job, and thank you for posting all those. That's how you get to where you want to be, guys. Strong top, odds favorable, 3 triggers through, jump the fudge in, and get paid. Momentum and path, my friends. Momentum and path. Nice one, Pete. Full body above. Resistance is now support. I agree. Not sure which way the triggers are going. I'm assuming you were thinking short trades with those triggers in transition. It looks like the areas on the 1 minute kept you out of bad decisions. Great job, Paul. And then we saw this one. Everything down with room to trouble. Pull back to the area. Room to get to the first trouble. All the money. We already talked about that one. Everything down. Room to trouble. Pulls back to resistance. Closes below. I mean, my goodness, Paul. Fantastic. So between your 2 trades, that was like $2,300. 2 trades on 2 lots. Perfect trend trades, perfect execution, getting paid at the first sign of trouble, letting the next one run. Sergio, do you see his second exit at the outer band? Little experience coming in there. Nice job, Paul. This looks like Miss Lucy. Triggers are down, strong side, pulls back to the area, closes below, makes some money. Because small triggers rolled up, so I need a pull back to an area, then a down bar that closes below small triggers with room to trouble. She identifies the fight. This is the perfectly annotated chart, guys. So for those of you that are new, Limpid, Miss Diana, who else is new in here? Don't be shy. I am like so easy to get along with some days. Miss Lucy is less than a month in. Miss Lucy has dedicated herself to one trade. One trade. I think we are one loser deep into her education. Guys, there's so much money to be made in the markets. You don't have to be in every move to make it. Miss Lucy, thank you for sharing that. What a great looking trade. Let's see what the CEO's doing. Triggers are down. First attempt on a PSO on the large chart. So John took what's called an HVA trade. When a large chart termination is reached, when the smalls get above the large, there's a pullback to an area called an HVA, best look ever. And he takes the first shot at it because he's been doing this a while. 20-point stop locked in into trouble. Market order exit sucks in volatility. Can't go short anymore. Has a pattern to go long. Great job, John. Good annotation, too. That's called the HVA trade, and it is on the plan that I gave you. Triggers up. Terry Cano, good to see you in here, man. Triggers up, lots of room. There's the fight. There's the close above triggers. Money, money. Stop place below the pivot. I mean, rinse and or repeat. Fantastic, guys. That's all the pictures we have. The trend trade looks like the trend trade, right? Looks like the trend trade. Looks like the trend trade. And then with momentum and path, jump the fudge in. I love it. And look at this. Scrambled eggs on the NASDAQ. Just no clear direction, no clear momentum. And my automated system says, Mark, that's not your best look, brother. We're not going to give you a signal. We're not going to put you in that market. We're going to wait for momentum. And that may not get us because it didn't have divergence at the top. But boy, that was a pullback right to an area inside of triggers, wasn't it? Whew, I love it, guys. Triggers are up. Room to trouble. Nothing going on. If you tried to get it at the mid-band, you got run over. And now there's just nothing. I don't have it. This is that same scramble. Same market, same scramble, just different look. Crude oil. Crude oil's killing it today. Momentum, 3 triggers through. Pull back to the area inside of triggers. And where does it stop? Right at Fibonacci resistance. Who could have predicted that? Pull back to the area inside of triggers. Never goes where the market shouldn't. This one blows through Fibonacci support. Guys, your whole day could have been done on 2 trades. Your whole day could have, you could be on the golf course right now. If you didn't try to go short without momentum, right? If you didn't try to go long without momentum, if you didn't trade directly into trouble, you could be on the golf course. All right, so here's where I ask, how we doing? Triggers are up. We're just above the zone, but everything is down and we're pulling back to a mid-band. And there's just no room. That's the S&P. Let's go NASDAQ. Triggers are up. That's a big bar. All right, I'm going to take a deep breath. Whew, that's fast. That was crude oil. Did you guys see that? That's untradeable. You can try if you want. Guys, that's untradeable. If it's up here and it shows up down here in a blink of an eye, good luck to you. And that strong trend up, your system kept saying, let's go along with it. We'll see what it does. All right, this is where, guys, room's open for you. Room's open for you. I've run out of smart stuff to say. Now I need you guys to ask questions so I can give the illusion of being intelligent. So while we wait for that, we're going to let the system do its thing, guys. If the system initiates an entry, we'll use pivots for stops. We'll use lines for targets. We'll see what happens. Look at that fib. Stopped the market cold. All that momentum. My system says, wait a minute, I like this look. Had to cancel it. Divergence from a fib. It's a pretty smart system, isn't it? Loser to review. Jump the gun. Let's see what you did. All right. Do you think it was the no room, Michelle, that got you? Can we look at it a different way? Are you okay with that? Can we play a different game? I will, Limpid. So Michelle, this would be one of the things that I would ask. This would be all the things that I ask, honestly. So When you say 3 triggers through, what does that mean to you? Is that a clear path? This is the most important question that I can ask you. Okay, 50-50. So I'm going to ask the question again because I think that if you say it, you're going to begin to believe it. Is it a clear path? No. And this is why we always go back to these 3 things. You're going to love this, Michelle, or you're going to hate it. So that's already gone. 33% of my advantages are gone. Does that make sense? It doesn't mean that there's not a trade. It means that it's no longer the best trade. So I gave you guys a checklist to take this trade with the highest chance of success, designed to optimize your chances of success. And it says that to have the best chance of success, you need a termination that reverses the market, which unfortunately we don't have here. So there's a no. Strong triggers, absolutely beautiful read. Strong triggers over here, absolutely beautiful read. And now, Michelle, here's the one. So divergence, whoops, wrong one. Divergence is a loss of momentum. Does that make sense? Every time I see divergence on my small chart, I'm losing momentum, which means that when the path isn't there, these are the 2 that I'm really relying on, is that momentum and the perfect entry. Now, you had the perfect entry, but you started sacrificing that momentum. And then, Michelle, it even says twice here, divergence, no trade, because divergence is one of the biggest killers when it's only the potential to break, especially from a bad top. Does that make sense? So the checklist is designed, and it's designed intentionally to keep you thinking about 2 things. One, making sure that a decision made above it was so powerful that it reversed the market right from a key area. Because what that means, the idea of a strong top or bottom, and we'll go back to that idea that we had before. It means that the buyers are in control. They've got not a care in the world. Life is good. And the path up is just beautiful. And then when they reach that key area, there were so many sellers waiting and so many buyers looking to jump ship that the market completely reverses and starts screaming the other way. That's why we call it a strong top. And when that happens, dun, 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 and they get to an area of support, it has a better chance of breaking. Because up here, the sellers are screaming, yeehaw, let's go down. They got there, we took it from them, this is our party, let's go south. And that's what gives these a better chance of breaking. So one of the biggest things for me is that strong top, is that strong bottom. And if you're gonna kind of ignore one divergence, and Michelle, if we're being completely honest with each other here, I will ignore one divergence in my own personal trading if the top is strong. Because I believe in that advantage. And look at this, there's a strong bottom, and they do push up and get through. Yeah. Your entry's perfect. The momentum is outstanding. There were 2 things working against it there that may have created problems. But your head's in the right spot. Your thought process is good. Remember that this is in here. You can print this out. You can put it on your desktop. You can check yourself before you ever enter the trade. And then you ask yourself, do I want to be in that trade? I'm losing advantages. They got us in here somewhere that didn't work out. Got us in short, took us out because of the pivot stop out. That's a good management. May have gotten us in short, took us out again because of the pivot stop out. Market canceled its order because the target was hit. Pretty cool, right? Great trade, Michelle. And now that we're on the wrong side of everything, small chart's no longer looking for the trade, even though the large chart likes it. And now with everything pushing down, my small chart's looking for an opportunity. And then when divergence prints from the 1-to-1, it chooses to ignore. Guys, the market's screaming right now. It really is. But what you're going to see is that your small chart is taking that large chart picture and it's processing it. And it's pretty cool. And I may even need to go on a higher time frame because of the volatility of the market. But we'll let it run for a second. And guys, I want to do this a lot. We'll look at TradingView, right? Triggers are pointing up for now. Do you guys see how they're stuck? This is one of those visuals. They've been stuck in this range since 5 a.m. where they can't get below 53 or above 475. It's a big range. But man, respecting areas. From resistance to support to resistance, bounces back down to support to resistance, back to support. You can see it on the chart. Support creates a bounce. Support creates a bounce. Resistance creates a bounce. Resistance creates a bounce. Over and over. Guys, if you can't find your rules met right now, good job. And this is a great lesson on how it's okay to be patient, how it's all right to not be in every move, how it's okay to sit on your hands, to relax, to wait for the market to give you what you absolutely demand that the market give you. Whoops, that's disabled. Got to enable that. These black dots are system-induced exits. It's awesome. Second higher lower divergences, PSOs, pivot stop outs. But not being around to manage it, I guarantee those losers didn't have to be that big. So when I walk away, I'm going to disable, because as good as everything is, guys, there's very little substitution for an intelligent person at the helm. Not that I'm intelligent, but I'm pretty good with these patterns. What would you guys like to talk about? What can I do for you? What's going to make you happy? The momentum is there, without a doubt. There's room to trouble. Triggers are kind of wonky, but it made it right to the bottom of the retracement zone. Split in the fib. Let's go see if the ES. There's crude oil. There was your pullback to the mid-band inside of triggers. And now it's going down. Crude oil's cranking. You guys remember when crude oil used to trade like this all the time? Jen, our brains are assholes, aren't they? Pardon my French. Your brain will tell you, Jen, you have to take this maybe trade. Jen, you have to jump in against that trend. Jen, don't wait for your perfect entry. How are you ever going to get paid? Yours was on Friday afternoon. Yeah, we've all been there. There's two types of people in day trading. There's people that have lost a lot, and there's people that will lose a lot. And it's not because the plan doesn't work. It's because our brains tell us we need it. I had a talk with a young man last week. You dislike Fridays? Sometimes they're amazing. It's not Friday's fault. I had a conversation with a young man, and he was talking about, okay, I'll blame Friday too. Damn Friday. and he told me, he said, Mark, my plan is the KISS plan. That's my plan. And I said, awesome. Your KISS plan defines entries. And your KISS plan gives you very conservative management, right? Have you guys noticed that that's what's on the plan provided every day is a very conservative entry and very conservative management. What the plan doesn't define is stop losses. What the plan doesn't define is daily goals. These are one of the things that I think as you simulate and practice, I'm going to try to follow the rules of this plan. Respect stop losses, define stop losses, be very clear about when you have to shut down and walk away. This is the biggest thing that kills accounts. Watch this, show of hands. Who's blown an account in under 10 minutes because they ignored their stop losses and kept saying, I can get it back? My hand's up. I think everybody's done it, right? So guys, as you learn a plan, learn how to respect your stop losses. Now watch this. Who's hit their goal for the day and ended negative or blown out the account after the goal was reached? I made my $1,500 and then I gave $3,500 back. Everybody's done it, right? So guys, this is part of the practice too. This has nothing to do with entries and exits. This has everything to do with believing that you're in control and you've got to learn how to take control of yourself. And that's the fight. That's the biggest fight. Everyone's done it. So define your stop losses. When will I stop, right? And watch this. If I'm live and I hit my loss, I can go sim, right? And if I'm on sim and I hit it, I can make a note, hey, that day's gone. Now I'm just practicing. And the same with daily goals. And some people will say it's $1,000. And some people will say, when I hit it, I'll trade until I lose. Right? Oh, John, I've got that. And I can share it. And if you guys want to see it moving, let me open that up real quick. Should be opening. So guys, that's one of the things. There we go. It's really important is not just your entries and exits, but when it's time to sit still and when it's time to do nothing, or more importantly, when it's time to just walk away. And then guys, here are both of the TV lookalikes. The gray one that we were looking at earlier, and now here's the black one that John just gave you guys in the room as well. And I'm missing some stuff on this, John. It was there when I closed it and saved it. And I think I broke Ninja. Yeah, I got rid of my big ones. I got rid of the big triggers. So it is slightly different. There we go. Reload historical. I love this look though. This is sleek, if you will. And then there's John's if you want those big triggers to confuse you a little bit. Some of you guys can use them, no problem. Some of you choose not to, but there's both of them for you guys. Every morning I tell you guys, I'll give you everything you need to be successful with this software. That hasn't changed since I started teaching this class. If I don't hand it to you, you probably don't need it to be successful. If John Novak hands it to you, it means that it's one of the millions of ways that you can be even more successful once you learn the basics. And I think it's fun that John comes in here and does that for you guys. Hey, I know Mark's telling you guys trend trades, right? But let me show you what you can do. Let me show you what's out there for you. when you get really good at one trade, when you start understanding when you can't go long, when you recognize trigger configurations, this is how you'll be able to find more. But until you can find it the easy way, no reason to look for all the hard ways, I think. I don't give trading advice, but if I were teaching my wife to trade, I would probably keep her focused on one trade initially. They're still loading tick replay over here. See if it'll let me close it. There we go. There was another trend trade in crude oil. My goodness. Crude might be where it's at today, guys. Crude's looking good. I'm sorry. I didn't miss it, Trina. I just ignored it. I'm feeling just crazy defiant today. Triggers down. Room to trouble, and it had already been there, right? Market pulls back, closes below, and just doesn't work out. You're in at 83. And that was it. So great job of going back and looking at your charts and saying, okay, in the moment, it's beautiful, right? But it had already been there. So Trina, I don't pay attention. I do pay attention, but when I see everything perfect, I don't worry about those large triggers against me. I really don't when everything is perfect. If it's already been there, I get my guard up just a little bit more. Because a lot of times when everything is perfect for the short, they'll hit, maybe check, and then continue. Yeah, if it's against, it's a target. If it's already been there, it's a good target, a good reason to protect a position. Does that make sense? Nothing like adding more, right? But if it's already been there, that's going to help you get more out of these trades. So good job. Sergio, TV lookalike on NinjaTrader is really good. One question, I notice it freezes a lot or it goes dead. I need to download again. Do you think I need to place a ticket? Sergio, I asked John Novak about that, and John said that that market flow is very labor intensive or resource intensive. And that is one of the reasons, and John's in here too, which is amazing that you have the CEO in here talking to you. But that's one of the reasons on mine that I don't run market flow on my 1 minute on the lookalike, Sergio, because my very basic plan doesn't use it. All I need is price bars and small triggers in those areas, and everything else is just noise. So I think Adriana has it without without market flow on it. We were talking about it. I don't remember which one I sent you. Do you not have? Hold on. It depends on when I sent it to you. Yeah, you're not running it. You can get with Jason. Yeah, you're not running it. I don't know what your computer's like. I don't know how much is running in the backgrounds. I don't know what the speed is, what your internet's doing. You could have Jason hop on, take a look, see if he notices anything. Yeah, no worries. Victor, sitting on your hands, learn not to trade those huge candles. You can wipe one account on one candle. You can. And it goes back to that idea, right? Your right is to not trade. That's too much risk. I choose not to take the trade. Good job, Victor. It's hard to do, right? Oh no, it's going without me. And when you look at it after the fact, you'll be like, oh, I totally should have risked $10,000 on that trade. It went 50. It always does when you're not in it, it seems. Look at how fast that's moving. Holy wow. Did you catch a long in there, John? Did I miss a long in there? Discretion? I mean, that's the perfect look. 100%. Just the system didn't get it. TV. Maybe from down there. Guys, one of the things that you'll notice on TV, on TradingView, is when the market consolidates like this, these areas tend to really stack one on top of each other. And when that happens, you may have to make decisions. My goodness. It might be my computer. My computer may be having troubles today. Oh, the TV lookalike. You went long here, added on above the 1-to-1s, and got paid there. So everything's set up. You got in above trouble with momentum and just held it till you hit something solid. That's almost a chili dog. That's almost a TradingView chili dog. And then those were the zones on TV. Beautiful. Nice job, John. I'm going to keep you around. My gosh. 1 minute. My workspaces are struggling. Wayne, give me something to do. 2,400 on a one lot. That's not so bad. Going back to work. Have a good one. Trend is down. Strong side of the triggers. Room to trouble. Broke the zone. Pulls back. You get in with all the momentum. And just run it down to the next zone. Nice one, Wayne. Using this zone on the large chart to give you a backstop and just take the momentum trade. Dig it. Nicely done. Everything says down, area breaks, pulls back with momentum. Man, rock star. Target set at 1,200. Slip to 1,470. You'll forgive me if I don't cry for you in your slippage. Great job, Wayne. Easy day, right? And John Novak says his daily goal is 800 per contract. He'll keep trading until he has $200 trailing stop per contract from equity highs. Daily max loss limit is 500 per contract. When and if I hit minus 500, I will assess if I took all perfect trades with zero rule breaking. Then I will take a break and then return to the trade again later. If I did break any of my rules or did a poor job of trading, I must stop trading live money for the day. Make simulated trades and do not do any more damage. Either I am off or the market is off. Important, never blow out and never lose more than $1,000 per contract in one day. And that's not trading advice, my friends. That's John's trading plan. Literally, I've heard this for years. That's his plan. Clearly defined. Clearly defined. You have to define your plan. Limpid. Are you still in here, Limpid? I can't get my indicators on here. I'm going to try one more time. All right, Limpid, the negative numbers. This is cool. Sorry, you have to do me a favor. Don't ever let me get away with not answering your question. It's never intentional. All right, so when the market pushes down, but I'm known for missing them sometimes. Are you familiar with MACDs, Limpid? Momentum indicator. So when the market pushes down, your software is running these calculations in the background. When it forms a pivot and about 2.5 bars up, there's a comparison with some MACDs underneath, and it's a momentum indicator. And if there's a loss of momentum, if there is a divergence between what price is doing compared to those MACDs, you'll see the line print with the negative number. The negative number is irrelevant. The negative number is, it has nothing to do with the strength of a divergence or anything like that. It's a byproduct of the calculations that have to make it happen. The one below the chart. You find the MACDs hard to read? I want to make sure that I'm understanding. I do too. If that's what you're talking about, I do too. The beauty of it is John Novak has automated, and you'll see that cyan line or that magenta line. The software does all the reading for you. And one of the ways you can use these is those lines. Let me give my divergence lesson, my pivot stop out lesson. And the market's been so crazy, we're not seeing tons of them right now. But here's a good example. Are they doing the same thing? The lines? All the line is doing is watch this. The sellers are in control and the buyers steal their momentum. This is what I think every time I see a divergence line. Sellers in control, buyers steal momentum. And what happens with the software, Limpid, is you see the line in the sand created by the buyers. This is exactly where we told the sellers no more. We're stealing your momentum. Don't try it. And look what happens when the sellers return to that line. The buyers were waiting right at that line in the sand. That is where the giant retracement happened. And then here they got two triggers through, but it's still that line in the sand. And that's what we call a pivot stop out, where they let the sellers think they made it, and then they just absolutely railroad them and can change a market. But it's cool because your software does it. It shows you the line in the sand, and when price reaches it, it's an area that could stop the market. Does that make sense? To the tick right here, look at that line in the sand, stopped them to the tick. Pretty cool, right? What an advantage to know where that is. And sometimes they break them, and we let the triggers tell us when they have a good chance. Line in the sand, pivot stop out. Another line in the sand, look at that. Bang, bang, boom. Pretty cool stuff. And now we're at one of those lines in the sand right now. And we just have to wait for the reaction. They're either going to break it or they're not. We don't have to guess. We just wait for the triggers to tell us. John taking momentum off of the outer band. Not a lot of room to trouble. Rooting for you, John Novak. Oh no, that's only 3 triggers through. We got a fib update. And they're going to get us on this one. Not a strong top, Michelle. Not momentum. Not momentum. No areas inside of triggers. It's pushing a little bit. Let's look at trading view. It's just nowhere to go. And that's the challenge with this one. Price is already reached. And for now, it appears to at least be stuttering it a little bit. We'll see what happens. The triggers are definitely up. All the triggers are up here. Brand new users probably not taking that shot like John Novak did. But when you made $2,400 on a one lot up to it, you can take a shot. You got room to spare. All right. Guys, I'm going to go take 5 minutes. I'm going to let you set the tone. Last hour is 100% you. We'll go back and forth. We will look at... Uh-oh. I think I accidentally shut it down. I did. Whoops. I don't know how that happened. That's not right. All right. Something happened. I'm going to have to close that one and probably reopen it. And I got your question right now, Victor. We'll have to reopen that one. Victor, I don't understand that trade. I'm waiting for a pullback. Victor, man, look at crude oil go. Let me show you something, Victor. This is John Novak in his world of experience. This is Victor in comparison. Guys, please do not try to be John Novak. You don't have to understand his trades. There is more going in his brain that never falls out of his mouth than any of you will understand. There's more that goes on in his head, Victor, than you'll ever understand. This is directly into an area. It doesn't have momentum. That's what it looks like, right? That's horrible. Who would do that? Somebody with 30 years experience on you would look at a bigger picture, would say, you know what? Because of what I see, I'm willing to take a shot. And guys, it's real important. Stay in your lane. Trade your plan. Just because it can be done doesn't mean that you should be doing it or that you're ready to do it. Maybe you will one day. So, Jerry, absolutely. Outer bands can create a bounce. Outer bands can stop a market. Outer bands can mess up your good time. And Victor, I believe that I read my indicators probably as effectively as John Novak. Not quite, because he still knows stuff that I'll probably never know, and he's probably forgotten things that I'll never know. But 99.9% of the time, we agree on the read. And just because we agree on the read doesn't mean that we both take a trade in that moment. We have different plans. I can't process fast as John Novak can to manage a trade the way he does. And so even though I teach this room and I can look at his charts and I can know exactly why I did what he did and where he did it, it doesn't mean that I have to do it. And the same is true for you guys. Just because you see someone jump the fudge in doesn't mean you have to do it. Just because somebody's taking counter trends doesn't mean that you have to do it. It's right on the picture, Wayne. Oh, that's the second picture. He got in on this bar right here. Market comes down, pops back up. He's behind the HVA of the white bar. Next bar probably opened above it, if I had to guess. There we go. HVA with a white bar stop out. His stop is below the highest volume area. It's right there, $200. Can you guys give me a Y in the room if you see that trading into the line lost? Everybody's like, how do I do what John did? How do I lose $200? Everybody, before they see the result, wants that entry. You will make decisions, guys, based on your experience reading the indicators. You'll have to determine whether or not it's right for you. If you're brand new and you took the John Novak trade, as I have it described in the room, you lost money. You're pissed off. You're not confident. And now, because you don't have the mental fortitude that someone with 30 years has, you're starting to take revenge trades to get it back. And you're angry and you're despondent. And guys, it doesn't have to be that way. You may have that trade one day. Or you may be short from the HVA line and a termination and smalls below the large and saying, you know what? That's a pretty good look for an HVA trade. Let's see if they want to go down to support. And it may or may not, but that fits the HVA plan. First, it's a termination. Smalls get below the large. We're actually really late on it. We should have been in all the way back here. And it went from 65 all the way to 39. So it already did its 25 points. That pink line is the line in the sand from the sellers after the termination condition held. And we missed our real entry, but it looks a lot like that. And if this is really going to be the top, that's a great spot for a top. No HVA shorts when the 15 triggers are nuked. I agree. I don't disagree at all. But this is kind of the way, if you have a plan, you don't hope stuff breaks, right? You tend to lean towards that clear path. And those triggers are up, absolutely. And there was your pullback to the area. And that was your close above if you were going to do it. Do you guys see it? The trend is up. Whoops. There's your fight. There's your close above. Stop goes below the pivot. 72 is that resistance, which means there's not a lot of room to get there. But that's your trend trade. That fits the rules 100%. And there you go, Jen. If it was into the 15-minute zone, it's not your trade. I had a close above at 61. I had the zone at 72. So I had 11 points to get to that thing that could stop the market. $220 per contract. All the momentum, all the room to trouble, pull back to the area inside of triggers, Cav, early entry, right? Early entry. It went right to the area inside. And there it goes. Great trade. Pull back to the triggers. It's not an entry rule. Pull back to the area inside of triggers. Less risk, more profits. More often than not. Jen, you had to refresh? No worries. Happens sometimes. Here, I'll refresh too. Maybe it's me. I'll reload, you reload. We'll meet in the middle and we'll see what happens. Mine looks pretty similar. But that was it. There was your close above right here at 60. So we actually had, yeah, about 12 points. Supposed to be an HVA from support. Manage for small loss. Nowhere to go, right, Phil? Hit it, hit it, hit it. And now it's coming back down. You're like, let's get in. Yeah, it had already been there 3 times. Already been there 3 times. Good stuff. Good post. Still nowhere to go yet. Does it make sense to everybody that with the triggers up, with the pullback to support, with the close above, that fit the rules 100% for a trend trade? Termination, and that's the one we talked about, right? Smalls get below, sell the HVA, take and manage with the mid band in the way. Probably got a little something on that one. Good job. Triggers up. Yours is at 61. No worries, Jen. Did mine come back up? Mine came back up at 72. You can do whatever you want, Trina. I don't teach divergences as entries, but you can do whatever you want. Show me an example. Did someone do it? Sorry, not being picky, just ensuring if... No, you're not being picky at all. You got to check it out. Look at that. Jen, do you ever do this where you come in and go to settings and you can clear your cache, and sometimes clearing the cache, got to relaunch. Let's see if it changes mine. I do that every now and then. You do it twice a session. I don't do it like I should. Mine still looks pretty consistent the way it was. That's okay. So 3 dots up top, main menu. When you click on it, go to settings, go to service, and clear cache. And mine didn't change, but yours might. You're welcome. And then John says, I'm going to give it another shot into trouble. I lost the last one. Hell, I got to win this one. Because the triggers are strong. So guys, this is where you get 2 different ones, right? This chart says don't do it, John Novak. This chart says John Novak, let's go to 95.77. Which one do you believe? There's an HVA, but you don't have momentum, right? You had an HVA here too without momentum. What does your plan say? These triggers said they're probably going to the fib. John said, I'm going to go with this big 15-minute chart, and I made the Fibonacci. I know it's good. And guys, you can do that. If you're not good at looking at the big picture and making decisions, multiple different charts, they still didn't get out of it. Multiple charts are going to jack you up. Phil, that's Ninja Trader. It's a lookalike. That's all the auto. One-to-one shift on close of entry bar. Triggers up, pull back to the midband, close below or close above. I'm not sure how you got stopped out of that one. And then it comes up and there is no fight and you just jump in and it makes it to trouble. Oh, the stop out was the previous short. I got you. That makes more sense. So you took an HVA short with trend trade rules long met. You could have just gone long, right? Damn those counter trends. And then here you're just jumping in, right? Not really a pullback anywhere, just kind of sideways slide. And you said, that's momentum, let me jump in. And it worked. because this said it's likely to work. Good job, Phil. And there you go. Problems is problems, right? I get such a kick out of watching John Novak trade because I learned something. And the flip side of that is I've got to learn to try not to do what John Novak is doing, because I'm not there yet. Let me tell you a story. A story time. When I went to college, I started college at 30, guys. I'm not a math guy. Um, I had a friend that was an engineer down in Houston, and he was the president of engineering for Varco Drilling. This guy was brilliant. Um, and he got a perfect score on his SATs, math section, couldn't spell his way out of a wet paper bag. And when I had to take college algebra, I told him, I was like, I need help. I need a tutor. And he couldn't make himself dumb enough to tutor me. He couldn't drop a level and speak to me in the terms that I needed to have a chance of understanding them. And guys, that's how I feel most of us are trying to look at John Novak's chart and figure out what he did and why. Because there's 1,000 things that are second nature assumptions to somebody of that level. And they don't put them on the chart to turn it into a complete lesson. And it's okay. John's not here to teach you guys how to do what he does. I'm here to teach you how to use his amazing indicators to do what you do. But remember that when you're watching someone that's 10 years, 15 years, 20 years ahead of you, and you try to do what they're doing, chances are they're not showing you the complete picture. Chances are they're not telling you everything that they thought of. And there's a really good chance that you're going to take a half lesson and blow out your accounts. So, little cautionary tale there. Little cautionary tale. And then, John, this is your whole plan? How cool is that? That he comes in and gives you guys his plan. And how horrible is that I just told you guys you're going to shoot your foot off? A little ballistic podiatry. Trying to learn string theory from Einstein, right? Look at all of that. Good luck, guys. It's an amazing plan. I've read it 100 times. It's an outstanding plan if you know what everything means. And if you're not there yet, there's a much simpler plan. 1-to-1s, triggers up, pull back to the area. John takes it at the area, tiny little risk to see if they go to the next level. Great stuff, John. There we go. We're in. Let's put our stops where the market shouldn't go. Let's wait for a reversal bar up. If we get one, we'll move stops behind that. Bum, bum, bum. Whoops. Sorry. All right, bottom of the retracement zone. And didn't work out, did it? Happens sometimes. Happens sometimes. So we wait for the next one. That was the perfect trade. I would take that trade all day long. What do you want to talk about, my friends? We still have 45 minutes. You're looking at it, Jerry. This is it. You're welcome. There we go. There's our reversal bar, reduce risk, profits at trouble. And then do we want a runner to see if it goes to the second trouble? If it doesn't stop us out, should we take 3 at trouble? Trailing stops are starting to work. Get up there. Oh, got us. May have put my stop in the wrong spot. Another reversal bar, another pivot. Nope. Tiny little loss. It's one of the things that we can do is get our targets in the right spot, guys. Put your targets where the market is likely to stop. This is one of the things that I'm learning right now, how to present this in the room, and John and I haven't come up with a solid plan for it. But at 22.50, I had something that could stop the market. At 21.50, they decided to shut it down. Would have been a good spot for a target. Turning losers into winners, guys. Turning great entries into money. That's the goal. And that's one of the things that you're going to see in this room a lot coming up, is we're going to start watching this, guys. It's just everything that I teach. Now we're directly into trouble. Making fresh pasta. I like it. You know, for Christmas, I got my wife the pasta attachment for the KitchenAid. I haven't seen any pasta yet. Just if you could write her a note or something, I'd appreciate that. Of course, I haven't made it either, so maybe that's on me. That's what you use? Everything we do is gluten-free. She has celiacs, so we thought making our own pasta would be pretty cool. John makes an awesome red sauce. Got to get that recipe. So guys, you get to do this with me. You get to watch me learn how to find the best way to do this. And of course, I share everything as I learn how to do it. Just like anything else, I'm on simulator right now. I'm figuring things out. There's a termination. It reversed the market, producing momentum. We'll see if the system comes up with something here. But using those pivots for stops, and it's going to come up. Price can return to the triggers. It's looking just below those synthetics. Didn't get us, no trade. But it's looking, right? When the large chart's perfect, it's looking for the trade, and it's not just jumping in. Even the system knows that great entries create manageable trades. It's a lot of fun. So guys, I'm putting on you. If you have questions, drop them in the room. Otherwise, we're going to watch this until noon. See what it does. John has plans to make the system the centerpiece of what we do for this room and just run system and manage it well. He has 4 upgrades coming to it: extra wide triggers only condition, alert for when large chart gives signal so you know, found max entries, that will allow more than it's set for. When divergence terminates, I have updated. Hope to have this done by tonight, and we'll send one out. Send one more upgrade to everyone, then change how we do this room. There you go, guys. Number 3 solved issue to more than one trade. Now it's reading per divergence, not per trend change. That's cool. If you guys had any idea the hours that go into creating something like this, it's pretty outstanding. It's a lot of fun to watch. Going to be Mark and I perfected. Everything we teach wrapped up. I'm so stinking stoked. All right, there's those strong triggers. What do you guys think about, since it is perfect, finding that area inside of triggers? This is the automated system. Keeping your stop where the market shouldn't go, right? So that's one of the things that you can do, is you can say, wow, I've got areas inside of triggers. Let me try that. If we get a reversal bar, we'll reduce risk behind it. If we don't, we've got our stop on the other side of the retracement zone. We've got large chart targets, should we feel like we need them. There's our reversal bar. We'll reduce a little bit of risk. What do you guys think? Take one at a divergence high if they get there? And if we get a second lower divergence, the system pulls us out instead of relying on us to make good decisions. Papa, we're here for you. We are here for you. I am not going to let you flounder. So guys, if you still need feedback, there's going to be a way to get it done. Don't worry about that. But it does mean, guys, it does mean that I'm not going to go through every morning and read this verbatim to a room every morning. So the plans are there. The rules are there. They're set. As you practice them, if you need feedback, it's no different. My email always works. Discord works. But I would encourage you guys to learn these rules, to get in the habit of annotating. Most of you don't realize that you don't need me already. I'm just good conversation. All the momentum. Is it going to give us another entry? That may be John's update that's coming. Can't wait for Nexgen to have a funded account to work on NinjaTrader. I believe he's working on that, if I'm not mistaken. John Novak, happy but never satisfied. On trend trades, if divergence, have to get back in with up divergence. Yeah. I'm not messing with the system, though. Not yet. This is what John and I are going to talk about. I'm probably going to have to drive down to Sarasota this weekend. We'll have a business meeting on the golf course and talk about the perfect way to run the system, which means John Novak gets to pay for golf this weekend because it is a business meeting. Man, I like this. I like where this is headed. And then sometimes it goes without you. But this is where, and John, I agree with you 100%. When it's perfect, that's your get back in signal. I don't disagree. Not even a little bit, John. And I really think that when we come up with a solid plan, that'll probably be a part of it. If this is perfect, that's your re-entry signal, 100%. And what do we say in the wonderful world, right? Second lower divergence, if the rules are still met, a reversal bar is your entry. That's that management part. Your system handles the management of that second lower divergence. Keeps you from holding and hoping. Systems are stupid. That's awesome. And that's true. They do what you tell them, not what you intended. And I don't know if you know this, John Novak, but most of us, our intentions are not nearly as good as we wish they were. Listening to our guts just doesn't seem to pay the way we wish it would. What a great thing to have something pragmatic that says, I see lines. I know you want to trade into them. Let me help you not trade into them. I see a second lower divergence. I know you want to hold that trade. Let me help you not hold that trade. I need that in my life. I love that black and white, that simplicity. Hope, wish, pray is not a good reason, but I won't trade into one-to-ones on the outer band on one-to-ones at outer band on the 15-minute. I wouldn't either. Any removal of emotion, you're all in for. But Jen, did you see what it did? It's just the perfect trade, right? It's the ideal trade. And now it does it for you. You know what I was wondering is so my wife Jenny is taking May off. And we're gonna reinstate her NinjaTrader account. I'm gonna put one of these systems in her hands, and she is gonna trade it per the plan 100%. I'm excited about that. Her life revolves around rules. Great if you can get away with it. Yeah. We are kept men, right? It's funny though, because I'm not smart enough to find success deviating, and my wife is so darn smart, she's going to have to fight that a little bit. System says no. System says you reached a line, sit tight, wait, let's relax. Smart is a curse, dumbass rule following is best. Amen. I resemble that remark, John. I think it's funny. The difference between two brothers 2.5 years apart. One is an absolute genius, the other one draws on people. But it goes back to my buddy that aced his SATs. Sometimes you want the teacher that learned from the really smart guy, but translates for humans. And John 55 says, sit tight. And that's just a higher time frame. And guys, that may be one of the things that we do too, is the automated system runs on the time frames. And there is a 55-21 time frame, and the stops are a little bigger and the targets are a little bigger, but the methodology is exactly the same. Even though the large chart likes it, the small chart doesn't care for things being on the wrong side of the triggers. Does it sound familiar? It should. Triggers are up. Room to trouble. That is a momentum style trade right there. Pull back to the HVA. They may have already done it. If they hit it, that's about all I'm willing to risk on it. Well, other side of the large. That's your momentum style entry, but it's directly into trouble. But where are they likely to go? How about an outer band, since those can create bounces? And then Jerry, you asked, is the auto system still available for purchase or just lease? You have a friend that's interested. If I'm not mistaken, and John, correct me if I'm wrong, it will be maybe a short run of purchases, but more than likely just the lease. And watch this. How about if we just lock in 200 bucks? Nothing bad can happen. We're back into the small triggers. We have our target. Perfect momentum trade. Remember, we're here to get paid, right? Arbitrary stops. Let's lock 1,000. Either make it or don't, so I can go to 10K's picture. We'll come back and check it. I don't care. I made 1,000 no matter what. Strong triggers. Large triggers close on the right side to the outer band. Pull back to the HVA. I agree. Better entry pulling back to the HVA because you get that little fight 10K. Either way, though, you're behind, and it goes right to the outer band, right where your indicator said that it was most likely to go. And look at that. Taking $1,000 is never a bad idea, is it? Never a bad idea. Nice trade, 10K. What would you guys like to talk about? What's going to make you happy, guys? John Novak, what's on your mind? Was I right about you may? Oh, here we go. Jerry. $5K for a 6-month lease. Get you all the indicators, right? Get you everything. 6 months. 16.5 for everything we do. I love it. Lease or purchase a lifetime. Who was it? It was Morgan that said he already passed Apex accounts with the new version. And John says the room will be dedicated to only system trading and helping it to do extra well. So John Novak, do we have a plan for the people that still need a little feedback on their T3 indicators? Probably something that we'll talk about, but it won't be this room. Annotated charts in my email. There's only one of me, Morgan. I can't run 2 education rooms. I do know that this is the biggest group that's been in this room for the last month. I'm sure I agree with John. Can we talk it over? Perfect, John. I like that answer. 90,000 hours of video. Doing the same thing with the entries. I like it. I'm excited about it. What it's going to do is it's going to get you guys that have been sitting on the sidelines, hoping, not asking for feedback. Those are all the people that are going to come out of the woodwork. Hey, I need feedback. John, great top, no triggers pass, should be short soon. Termination, rolling, yep. Well, let's set up. We just didn't get there. He gave me the signal, but I didn't get the lines hit fib resistance value because it didn't get to the cents, I think. No fill. So these are the ones that we're going to decide on. When it's absolutely perfect, I'm all for. Pull your entry to the area inside of triggers, right? Look at that look. They're perfect entries. They just didn't quite get to the synthetics. But it's the ideal entry. So these are the things that John and I are gonna work through and get consistency on so that every day is exactly the same. My emotions, my opinions, my desires will have nothing to do with it. And is there, and that would be discretionary, right, John? If they're split and you get a reversal bar, sell it. Yes, we will trade NASDAQ with the system and class, I think, Michelle. John, we could do the ES, right? So maybe both, Michelle. I like this. This is a good little Q&A based on what we can do well. Everything is the answer to that, John Novak. Just ask me. Everything is the only answer to that. John gave the file up a little bit, Pablo. The most recent. Maybe he'll drop it in down here so I don't have to go chase it. And he's got one more coming, hopefully tonight, is what he said. No, sorry. That's why I teach people to read indicators. And ATM is automated trading system, John. I think he's referring to the system, not the management strategy. Is that right, Pablo? You're talking about a new version of the system? Yeah, not the stops and targets. And then Sergio, yes, the small chart is your receiver chart. The large chart is your transmitter chart. So when the large chart gives a signal, the small chart rules have to be true as well. Jerry, the system doesn't run on a platform that you can use for the prop system. Sergio, I think he was going to take out arrows that don't get filled, if I'm not mistaken. John can answer that. You got the system. So John moved his entry to the areas inside of the triggers. You can see where he moved his limit order. And that's on a 55. So we didn't get to see the same thing on ours. But that would be one of those instances where you could say everything is perfect. Let me get my entry to the area inside of triggers instead of hoping that it comes down to the synthetics. And guys, all of our settings will be handed over to you. You'll be able to see it. You guys can run exactly what we run. I'm going to this weekend for sure, if not before the week is out. It's only Monday, isn't it? Yeah, definitely before the week is out. Probably in the next 24 hours. We'll have a dedicated written plan of how it will be run in the room regarding entries, regarding stops, regarding targets, and then that will be handed out as well so that you guys have an idea of what it is you're looking at, and then you can create some expectations. You know what my favorite part about the system is? This is just me expanding on what I believe and what I love, is that you'll begin to realize that not every move is a trade. And then John, you've got strong top, strong triggers. There's your entry. Got to break even. The system's trying to sell just above the 1-to-1s. So you put an order below it. Stop where the market shouldn't go. Looks different on a 55 than it does on a 34. You're literally seeing the move. This is your pullback for a trend trade, probably on the 21. And it looks like a pullback to the mid-band from a weak bottom on a 34. So if you look at John's picture, bum, bum, bum. This is a 55. And that pullback right there to 17, That's right where John's entry was, right at the pivot stop out. Pretty cool, right? Just a higher time frame. Which time frame is best for the room? I don't know if we know that answer yet. I think if the market is super fast, the higher time frame makes sense. Slow it down a little bit. We do not oh, I got you. We do not. Sorry. See? That's that assumptive thing that I talked about. I love it. I'm so excited about this. To be on the sidelines and watch this thing come to fruition and to recognize it as everything that I've taught for the last 6 years is just freaking outstanding. I'm so excited. Triggers are up. No room with the close above. There's rule number 2, keeping you out of trouble. Pivot stop out above. Where is he? Limpid, do you see it? Line in the sand, killed him. Line in the sand, killed him. There's a reason that these areas, I'm telling you guys, it's like having a crystal ball. It's like going and will that PSO break? Outlook not so good. Even the 8-ball knows. Don't mess with the pivot stop outs. That's what I go to when people ask me, what's the market going to do, Mark? I can tell you what it's likely to do. I can't tell you for certain, or I wouldn't be sitting in this chair. Colors don't match on the triggers. No clear path down, no clear path up. Look at what it looks like if you squeeze it. Odds are 55 says going to 73. Which way? Down here? I would agree with that because weak bottom, mid-band holding. I'm going to say 56.75, John. That's my call. They're going to go for the next key Fibonacci area if they go down. They're going to go for the next key Fibonacci area if they go up. And until they give me trade entry, I'm going to let them fight it out. I can see exactly where they're fighting. Hell, I could take this box and say, I'm going to let them get out of here. And I can tell you the system's going to do it too. The system's going to force them to get away from things. The system's going to tell them, we don't have to guess. We're better than that. Sit on your hands. Your opinion means nothing to me. It's like being married. I'll tell you when it's time to do something. Until then, sit tight. How was golfing, Pablo? Price reached yellow 1-to-1s. Triggers didn't break. Notice that the system isn't initiating. Not bad for the first time out. I like it. 5 pars. Heck yeah. Pablo was my sanity when we were in Spokane. Let me join his crew and go play golf with the cool kids. Had to make one more turn before we go down. We'll see. I think the challenge is, and I think one of my favorite things about those very simple rules is, for me personally, I can get married to a trade and take 7, 8, 9, 10 shots at it, hoping that it does, right? And sometimes it's just better to let it all get going that way, riding the coattails. Financial suicide. There we go. There's that giant push down. There's those sellers John was looking for. There's a pullback to an area inside of triggers. Not the best look yet. Don't have the momentum. Not yet. They'll work it out. They always do, guys. They'll work it out. I don't know if I finished my thought on this. 90% of your day is waiting. When you have something that insists on the best entries, you begin to realize that it's true. That 90% of the day is doing nothing. Well, John, I guess they're not going down. Unless you meant 73 up. In which case it's getting close. You see, John was smart. He didn't pick a direction. He knew it was going to go to 73 one way or the other. There we go. Let's see what it does. Reversal bar would have to be our stop movement, right? Where'd that area go up there? I think it's too soon. I'm going to keep that outside. Let's just let it run. Keep our stop where the market shouldn't go until it works its way out of the areas. Now that's our low end. Stop above pivot. I don't know what you... Oh, John's short? Are you kidding me? All right, so we're going to have to not do this. Everything about that says down, doesn't it? I guess I should have kept it below the pivot. That was my bad. That's why I'm going to come up with rules. But that's why you have to trade your charts. 10K, let's see what you did. Let's see what's going on, 10K. To the dot at the close of the right. So 10K trading from support because you never get a full bar below it. Hoping it gets a little deeper into that area of resistance. They're struggling, aren't they? Resistance is holding. We can see it. Support is holding. We can see it, right? So that chart says up. You go up with it, and it made it. Nicely done. Nicely done. And do you see how this is still support? So you take the close above, and you're just taking the close above from support, which makes it, gives you more room. I love that. And look at the small triggers from, they just keep pushing up. Just keep pushing up. That's a good sign. Nice trade, 10K. Nice trade. Waited for the color to change on the small triggers. I like it. Someone asked me about that once. They're like, is that the rule? Let the triggers roll? It's not. But it doesn't hurt, does it? Yell at John Novak in the background real quick. Definitely made it, didn't it? Triggers are up, but there's nowhere to go. Directly into one-to-ones, which means rule number one's not met. Which means if we're being completely honest with ourselves, there's no reason to look at the small chart, is there? No reason to go talk ourselves into an entry directly into one-to-ones. Probably better to sit on our hands. And now we're just waiting again. Here's my lookalike. I don't know why I don't have what I need here. John, which template? 115 bar timer, fibs, and fast triggers. Let's see if that works. Boaz, let's see what you did, my friend. Oh, look at that. Everything is up. Tons of room. Pull back to the area. You even took the counter trend, the short to the long, Boaz. Back in above the small triggers and out again. That's awesome. Got the counter trend from the termination. Got out at trouble. Got back in for the trend trade rules. And got back out. Boaz, like an artist. There we go. Is there any way you can 4-8? Oh, you want your areas lighter on yours, 10K? Are you using Chart Prime? So double click. You want them darker or lighter? Go to inputs. You want them darker. Dun, dun, dun. Hold on. Levels, zones. Highs and lows. There's probably a way. Let's see if I double click on the indicator. Nope. I'm looking for opacity. And I'm not 100% sure where the opacity is on these. There we go. Click on the green 10K and 100%. And if you make it lower, you can see how light they go. So double click on them. And then when you get to the level style, make sure opacity is 100%. You could do a darker green if you wanted to, even. That's probably all wrong. But that's how you do it. That little neon works out great. No worries. I'd never actually done it. So, glad to help. Triggers are up. Pull back. Get in. I need help, John Novak. I'm going to have to go to my tech guy after class. Figure out why my lookalike's not doing what I need it to do. Probably just need to close it and reopen it. Oh no, it's reloading over here too. All right, guys, I think that's it for us today. So, pretty exciting news. I think pretty exciting news coming up. John and I will have definites over the next 48 hours for you. 1 minute template, thank you. Let me download it real quick. Thank you, John. You're welcome, Limpid. Took you out, went anyway. It'll do that sometimes, won't it? Sons of guns. So guys, we'll be back tomorrow, and we're going to do it again. And we're going to do it again. We're going to do it again until everybody gets to where they want to be, I hope. If you have questions, guys, you can always DM me in Discord. Like, you can send me a private message. I won't reach out to you. I won't ask you for crypto or offer to trade for you. If anyone ever does that and it looks like they're from Nexgen, they're not from Nexgen. It's a scam. Um, so don't fall for it. And I will see you guys tomorrow. So take care, everybody.